Okay, so speaking of these treasury companies, are you guys dabbling? This feels like the next, or like the current meta right now in
it's
crypto
definitely
world.
meta.
I bought the peak or near the peak of SBET. I think my average entry price is like $50.
Yeah, I'm underwater.
But
I'm underwater.
I went in on the options
Same.
last couple days.
Same.
You can tell they're ATMing hard. Like I looked today and SBET, like SBET was up like 28% yesterday. Today it was up like 3% when ETH was up like 7%. And I think they're just
So why
ATMing
don't you explain what the at the money facility is, and then Eric had some insight into like the daily
they're like
patterns.
TLDR. They're just like issuing new shares, using the shares to buy more Ethereum.
Yeah,
which is good. Like the market has already decided that this is good and desirable because it increases the amount of Ethereum you have per share. And this is kind of like the thing that MicroStrategy figured out, which is that like you as like an individual can't like leverage the sort of financial vehicles that a corporation can to like borrow money. Like, oh, you want to lever up on Bitcoin? You use perps, you get liquidated. You borrow money against some collateral, you get liquidated. Maybe you ask your mom for money. I don't know. It's not very efficient. But you can have Saylor use these like advanced financial instruments by virtue of the fact that he's like a publicly traded company.
Monetize the vol.
Buy more of Bitcoin for you, and then you get more Bitcoin per share over time. And that's the sort of the thing you're optimizing for. And in the short run, it looks like sucky sometimes because Bitcoin goes up and MSTR goes up less. But like, and I'm still trying to model out like how this actually ends up playing out, because in the long run, it makes sense that actually MSTR just outperforms Bitcoin, and it has by a lot. But you go through these periods where they're like diluting the fuck out of you to get more Bitcoin, and then, you know.
So what did you know? You were telling me earlier what you noticed about just the last couple of days of like SBET and how when they're issuing these shares during the day. What were you saying?
Well, like you can take today, for example, like in the overnight trading where there's like low liquidity, you see people bidding it up. It went up to $19.70 a share when it opened. And then intraday, it's down to $15.50. And who do you think's selling that? It's fucking Lubin and co, who are like
issuing more shares.
Like they're slapping the ATM facility to sell their shares to buy more Ethereum, which, as Steven mentioned, is actually great for you as an SBET holder if the underlying goes up in price over a long term, which is like what we're sort of betting on to begin with.
So I guess the pattern may not hold, but like ideally, if you're going to buy some, maybe middle of the trading day, like after they hammer that thing.
Yeah, and Carne Asada Chris pointed out too. He's like, so should we just buy options like midday, and then sell them in the morning?
There's some quant out there who has this nailed down to a T for sure. There's probably like all sorts of insane kind of trading strategies that are enabled by these things.
You're doing some of that, right? Like,
I mean, I think the best way for me is I want to be exposed to SBET, right? So the way that I am doing is like I hold the common. I bought a lot of common when it was at $45 a share, so I was down immediately. Mm-hmm. But now I'm like, I'm selling puts. I'm selling puts on SBET, some in the money, some at the money, some out of the money. I'm taking those proceeds. I'm buying common shares with it, or I'm buying calls with it because I just want more exposure. I mean, I want more shares.
That's your go-to strategy.
That's my whole thing. That's always been my thing. Like you got to pick the winners. Like it only works if you pick the winners. But like this is a way to really juice the hell out of the fruit if you pick a good one.
Mm-hmm. Yeah. I mean, it's very interesting to think about like how this cycle is going to be different from other cycles. Like obviously last cycle we didn't have treasury companies. It's just like entirely new, very large thing in the market, right? It's like you're in the pool and some like enormous fat guy just cannonballed in, right? And you're thinking about like, well, how does this change the environment in the pool here? Like you used to be able to just buy altcoins and they went up, right? And they're all kind of interchangeable to an extent. And it's just so different now. I think like so many altcoins are just going to be just horrific investments, you know. Maybe they slightly go up in dollar terms, but like volatility adjusted and on a relative basis, they're they're freaking terrible. It's probably still like just like generational like pair trade opportunities and a lot of these things as they just slowly unlock.
Well, another thing that you see is that with a lot of these new treasury companies that are sprouting up, they're all following the same pattern too, where they like issue their like S3 filing, where they have like a low float to begin with, and then they're going to come out with like a ton of new shares that they're going to issue to buy the treasury asset like ETH, and they typically all follow the SBET pattern, which is like moon until the shares get issued and then crush downward. And then that's the time where you want to buy them. So like Bitminer, which is like Tom Lee's, went up to 160 and today it's at 50 or something. And I think it'll continue to go downward because like it's going through that same process.
So you're waiting for MNAV to get to like 1.5 ish, I assume.
I mean, here's the thing with I think MNAV is the right metric to look at.
And this is the value of the stock relative to the value of the underlying holdings in the treasury.
Right.
So if it's 1.4, they've got like $100 million, the stocks are worth 140 million, and then they have like 100 million in
Ether. And you typically have to pay this premium because they're continuously adding to their ETH per share metric. So it's actually fair if you like pay a little bit of a premium and they're continuously adding to their ETH per share. There's like some reasonable amount that's fair. I think like you probably get good value at 1.2, 1.3, reasonable value at 1.4, 1.5. I think reasonable, like SBET's probably at like 1.9 right now, and I still think that's pretty reasonable.
Like SBET tickles my nerd brain because like MSTR always as soon as I realized what MSTR was doing, it was like very interesting to me, and I never quite went all in on it because it was like early December when I figured this out, and it was just like astronomical.
The thing had already gone up by 1,000%.
Yeah, but I was fascinated by it. Like I totally understood what Saylor was doing, and I don't think other people did, and I liked that. But then also I was like, it's just kind of. It's a weird time. It's too expensive. But SBET is even more interesting because you have like all of these other games you can play because like Ethereum has like the built-in yield. Like for example, if you hold Ethereum and it has like native yield, right? You can sort of do this like leverage staking thing in DeFi, right? Where you borrow ETH against your staked ETH and you kind of do it. And obviously there's like smart contract risk in that, but like I feel like in TradFi world, you could just have somebody do that.
Sure.
And yeah, like you could use insurance or you could just not do it with like DeFi protocols. Like you just do it like just.
You could have your consensus employees potentially just create that.
Yeah. So maybe you can lever that yield up to like 7%, but then you have this like inherently like 7% yielding asset and then you're using all the yield to buy more stuff and doing all this stuff. So there's like all these like interesting games you can play with it. And then you can kind of like assign multiples to that and whatnot. So it's pretty fascinating to think about all the directions it could play.
Can we talk about position sizing? Because right now, like let's say out of 100% of my Ether exposure, it's like 90% ETH or ETH, like common stock of an ETF, and then the rest of the 10% is call options on ETH, and then there's a small amount of like SBET.
Are you talking about position sizing because a certain person in our Discord went all in?
So yeah, we've learned that we have
26% in one day.
We have listeners that have been full porting potentially the retirement account into casual degen stock mentionings on this podcast. And,
by the way, he's retiring at the end of the year.
Well, he can for sure now. I mean, just full port the retirement account and thing goes up 40-something percent.
26% in a day is pretty good on your whole retirement.
That was one day. Now it's up like 50% for sure.
Yeah. So I don't feel comfortable with that personally. I don't
so you
want my wife and future kids to leave me.
Bet sizing in general?
Yeah. I mean, like, part of me is like, well, fuck, like, are we not, as convicted as we are, like, I still have like a control over the sizing of like the whole crypto portfolio in general.
I mean, you are a little bit of a pussy, I think.
No, yeah, and I feel good about it.
Yeah,
I feel comfy.
Also guilty as charged. I am such a pussy. When I saw what our listener did, I was like, God damn it, I'm such a bitch.
Yeah.